Hi everyone. I have my good friend Eugene here today, and we're just going to be doing a quick talk. We just get to know Eugene a little bit more and see what he's up to. So, Eugene, thanks for coming on today.
Yeah, absolutely. Thanks, man. Appreciate it.
Yeah, yeah. So, if you could give us, just like a little background, who you are, what you're doing, where you come from, that sort of a thing.
Yeah. Well, it's kind of it's kind of big question. We can go back to my years when I was just born, right? Or we can just go a few years back. Well, so I am. My name is Eugene Nilus. I I still work at a tech company. Have W-2, working as a marketer on a demand generation and lead generation side. Doing the online advertisement aspect of demand generation. Uh, and on the other side, I do real estate. Got involved in real estate a few years ago. Started buying duplexes and fourplexes. So I bought my first duplex 2 years ago, and then in about 8 months, I bought fourplex, and then I decided to go into multifamily space. And that's when I realized that if I go to multifamily space, I can go bigger and faster. And I met a lot of great people along the way. And I haven't bought a multifamily yet, but what actually did happen is it opened a lot more doors for me. It did open a lot more doors for me in regards to doing a lot more other things in real estate than just buy and hold. So I do money lending. I'm involved in fix and flips, and I'm also and I'm also and also looking for multifamily and self storages right now as well. So I wouldn't say that it's like I'm not upset or anything that I haven't bought my first multifamily yet, but I do feel like I am blessed to have these more doors open for me at the moment.
Love it. That's awesome. I feel like so it sounds like you basically had a goal, wanted to do something, and then something else happened, and now you're doing many different other things, right? In conjunction to wanting to do that same thing still. Is that right?
Absolutely.
That's awesome, man. That's beautiful. I feel like um, you never know what doors are open, right? And especially in real estate, there's so many pathways, so many different things you can do, right? It's not just one thing. So that's awesome to hear, man. So let me go back here a little bit. A few years ago, you decided to get into real estate, right? So what made you get into real estate? Like why real estate? Why not, other things like stocks or crypto or, some other things that other people do?
Yeah, absolutely. And I feel like owning physical assets is a is far more valuable than thinking, that owning um, versus anything else. Because you know, as far as owning stocks, I think it's great. I do own some of them. I do own some of the stocks, and I think the reality is, like, especially maybe just for me, I can't really touch them. I can't really feel them. It's like I do own stocks, but it feels like I don't own them at all. It's like they're somewhere. Like I don't have anything in my hand that I can touch and feel, right? But yet you can still make money on it. I mean, which is great. I mean, stocks go up and down a lot depending on the market, depending on how a company performs, and a lot more other variables. Yeah, real estate acts a little bit different. It also can go up and down depending on the economy. but it's always coming back. It's always coming back. Plus you actually can make money even in a recession if your property is cash flowing and your tenants are paying you, right? Your tenants are paying you, your property is cash flowing, you're still making money. Even though the equity of the house can go down, you're still making money. But eventually, as history told us, eventually real estate, does go up. Stocks on the other hand, may go up or may not. So if the company goes bust, then the stocks go bust.
Yeah, I think what you said there is so important, right? It's equity comes and equity goes, but cash always flows, right?
Exactly.
And so that's amazing. And real estate, you're right, is one of those that historically has just always come back. And as long as you can get through a downturn and hold it in cash flow, you can hold it for that throughout, right? You don't have to sell it. Whereas with stocks, I think a lot of people get into they make an emotional decision, right? That the stock market went down, so let me sell it.
That's right. That's an emotional roller coaster for a lot of people, and that's how people lose money, because they involve emotions in it.
Exactly. Yeah. So Eugene, you live in Northern California, correct?
Yes, sir.
Okay. Bay Area, right?
Yes.
All right. One of the hottest, most expensive markets. Is that where you invest?
No.
Why? Well, why not?
Well, I think I what I discovered, especially for myself, and what type of investor I am, is I like cash flow. If and a lot of, basically in California, you probably may find something, but not likely that places will be cash flowing. Basically, what cash flow means, if people don't know, is you spend some money, you spend money in a house, right? You pay for a loan, you pay for other things. But if your tenants are paying you and that amount is greater than what you're paying for the house, then the delta between those two is your cash flow. So not in California. I think you can find anything here. And maybe you can. Maybe some people do. But I do invest in other markets, more like mid-market, more like a I have few criteria. I do invest in first landlord friendly states. That's one. And I do invest in areas where it does make sense for cash flow to exist.
Got it.
Yeah, some areas could be still could be in Texas. Some areas, there are good areas in Texas. There are good areas in the mid states, like Louisiana, North Carolina, South Carolina.
Yeah,
stuff like.
makes sense. So it doesn't, it goes with your business model, right? Like your strategy is to find more cash flowing assets, right? And where that makes sense is maybe like in the Midwest or in the Southeast, right? Where it's a different market, different demographic, different laws and regulations compared to California, right? That makes
correct.
sense. Okay,
That's correct.
got it. So that means that you're an out-of-state investor, right? Like myself.
Yes, I'm a more out-of-state investor.
Got it. That has its own challenges and things, right? So let's go back. Let's talk about that first deal, right? You said you got into a duplex, right? Was that the first one that you got into?
That was the first one that I got into.
Got it. Yeah. Can you like walk us through like, being a first time out of state investor, buying a duplex? Well, what did that look like? How did that pan out? What's kind of the backstory there?
All right. Yeah. Good question. All right. So when what I started was, one a good friend of mine introduced me to a concept of out of state investing and real estate in general. Like I didn't even know that, I wanted to do real estate. So he introduced me to, he started talking to me about real estate. He started talking about the podcast called biggerpockets.com, bigger pockets, right? And I started listening to it. And then about 3-4 months after I listened to it, they talked about the book. During that time, they talked about a book called Rich Dad Poor Dad. I think everyone pretty much knows that book, especially everyone who is involved in business and investing. So I read that book. I should say probably listen to it because it's in audiobooks, and that opened my eyes a lot to what the money is and how to actually handle the money. And marrying these two things, like listening to biggerpockets.com and listening to that book, Rich Dad Poor Dad, I decided to go and take an action. So I sold my stocks, and I had enough money for a down payment. And the way I chose the market was, I think it was like fairly simple. I did not really overthink a lot. So I just went to Google. I searched 10 best markets in the United States. It was 2 years ago, right before the pandemic hit. Actually, no, 2.5 years ago. That's when I started doing my research. And then I chose, I opened 10, I found 10 best markets in the United States. I went through them, and I found a city called Houston. The medium home prices were in the same range where I was thinking. And I went to Zillow. I searched for 3 top best agents in Houston, real estate agents. And I called all 3. So one of them called us back first. And I say we because at that time, the guy who introduced me to real estate, he was also going to do real estate. So we decided to do it together. So one of the agents called us back, and we started working with him. And after about like a month or two, a friend of mine, he got a little bit, sidetracked, and he was actually moving out of California. They bought a house in New York. So he was a little bit sidetracked, right? So I decided to pursue it on my own. So I started working with that guy, and 3-4 months was good, and then it went a little bit sort of downstream because he started being unresponsive. So, and then I called the second person on the list, and then I started working with another real estate agent in Houston, and that was really well. That was going really well. So she helped find me a duplex, and that's when I sold my stocks and invested in duplex. So that duplex had already tenants in it, and it was cash flowing. I remember I bought it for $237,000. It was old. It was not in a very good neighborhood, like probably between C and D area, but it was cash flowing. So I was kind of happy because, I've heard that book. Hey, cash flow is important. I listened to Bigger Pockets, and it, and I was kind of happy that I found it because it was the moments, the lessons that I got from the book and from the podcast brought me to that specific point where I actually bought something, and I was happy about it. If it makes sense.
Yeah.
Yeah. And yeah, I mean, since then I've been owning that duplex. The tenants that I had in the duplex was on the Section 8, and it was actually, some people like it, some people don't, but I found it very interesting because the Section 8 could be also a recession-proof model. And at that time, we actually didn't go with if we were to go into the recession or not. So I bought because I also liked the fact that it had Section 8 people in it. And actually, I just sold it recently.
Love it. Nice. So you went full cycle on the deal. That's amazing.
I went full cycle.
Congratulations, man.
Thank you.
Yeah. So it sounds like, you mentioned a few golden nuggets there, right? And you started off with bigger pockets, right? And some resources and education to learn the space, right? And then you read and got yourself more educated by reading books and that sort of thing, right? And then of course, after you took action, that's huge. That's huge, right? Everybody talks like, you can read and learn everything, but if you don't take action, none of it matters, right?
Exactly.
So you took action. Love it, man. And then you realized that maybe the first one didn't work out, right? Maybe the first person you talked to didn't work, right? Second person you talked to didn't work. Third person happened to work, right? But you didn't give up. Like you just kept going, right?
I did keep going. That's correct.
That's amazing, bro. And then you talked out about an important concept, I think, right now is recession proof, right? And one of the things you said there was Section 8, right? So you're right. A lot of people use that as a, like recession proof strategy. And it's a hot topic right now because, according to all like metrics and indicators, we look like we're heading into a recession sometime in the next few years. I'm not a market predictor. I don't know what's going to happen, but that's what some of the experts are saying, right? At least.
Oh, hold on. Let me write it down. In a few years.
We're going to come back to this video. And we're going to be like, you remember what Samir said? Yeah, because people said that before COVID too, right? And then the market went crazy. So I could totally be wrong, right? But recession proof in that you're a long-term investor, right? You're not trying to time the market. You're not trying to, buy on a dip. You're looking at the long term. You happen to sell this duplex, but you could have held it for the long term if you needed to, right?
That's correct.
Because it cash flowed and you were positive. You weren't forced to make an irrational bad decision, right? So that's amazing.
Yeah, there were some interesting things that did happen, and there was a reason that I did sell it, and we can talk about this too. But you're absolutely right. So
let's go into that. Yeah, what happened? What's all the juicy details?
all the juicy details. Yeah, cool. So the duplex had already sort of like a time in it that I had to go and fix it up. So, and it was actually a good moment because so let me stay back. Because of the rents that were going up like crazy, I did not increase my rents since the time I bought it, right? So the rent started going crazy because of the supply demand in real estate, right? There are less supply than demand, and because of that, and not because of that, because there are lots of other reasons why, but rent started going up, and I was going to increase it by 150 or $200, not a lot. The government can pay it, and because so I'm going to step back again. Not a lot of people probably know that Section 8 is not only 100%. It's not where 100% government pays. So government pays only one portion, right? And the other portion is coming from tenants. So that portion could be completely different from one person to another, right? So I can pay maybe 20% and government pays 80%. you can pay 90%, you can pay 10% and government pays 90%. So it's completely different for different people. So I was going to increase it by $200, so not that much, but tenants started complaining, and one of the tenants decided to move out, which is fine. I think it's natural, right? So when you increase rents, some people don't like it, and they start looking for other places to live, which is completely normal. So I thought, okay, that's fine. I think it's time to remodel, the unit anyway. And another person started complaining as well. Another tenant in another unit, which is also fine. I was like, okay, cool. So I can remodel it, and I can increase the value of the property, and then I can either sell it for more because I would increase the equity, or I would refinance it and get my money back. So I started looking at different options and calculating everything in my spreadsheet. Like what would it look like if I were to remodel the units and then sell it? What it would look like if I remodel the units and refinance the house later on. So I started looking at these different models, and every model that I looked at was telling me that I would not be making money on this house, on any of these models, if I were to sell it as is right now. So the profit would be absolutely it would stay the same. So if I were to remodel the house and sell it, the profit would be X. If I were not to remodel and sell it, the profit would be X, the same. And if I were to remodel and then refinance it, I was still the profit would be the same. So I was like, what if every model shows the same profit? I would just take probably money right now and go invest into other deals. So that's what I did.
Yeah, no, that makes sense. And you touched upon a concept there is exit strategies, right? Like having multiple ways to exit this deal, right? Either you're going to sell, you're going to refinance, you're going to do maybe put another tenant in if you need to, whatever, right? Like you have multiple ways to get out of this, right? And that's important, right? A lot of people don't think about their exit; they think about the entry only. So one day you will exit out of this deal, right? So that makes sense, though. And you made a calculated decision, right? You took the numbers, and you identified what is the as-is value, and then what is the after rehabbed value, right? And if it's the same, what's the purpose of doing the renovation, right?
Exactly.
Yeah, right. Okay, love it.
Yeah.
Love it. That's awesome. So then from that, you said you had more different places to put the money, right? What does that look like to you now, right? Like, is there other investments you're working on? Is there certain different type of asset classes that you're focused on now that you're going to maybe take that money and put it into a different place?
Yeah, absolutely. So recently we closed on a fix and flip deal in Sarasota, Florida. I used some of the proceeds that after I sold my duplex and put it as a down payment. Like we put 10%. I took hard money loan, put 10% down, and I'm going to be using some of those proceeds as a holding cost. So this is the first fix and flip that I'm sort of getting involved to as a person who would be, very close to that flip, because I did invest in other fix and flips with other partners, and I'm just, I'm acting as a private money lender, and which is not bad, which is cool. But I also want to go and try a different vertical of the real estate of, being sort of closer to a fix and flip and see what it looks like. And the numbers actually pinned out very good on the Sarasota, Florida deal. and that's like one of the reasons I invested in it. But I also want to take those money and probably invest into other deals as well, maybe being also private money lender, or uh, put some money into multifamily project as well.
Love it.
So yeah, so that's sort of the idea right now. And again, I don't know what it would look like even in a month or two, because as we know, a lot more doors get open if you in this space and connect and network with different people every day. So you never know where those you never know where you can end up even in a month.
Yeah. I mean, what, 2-3 years ago, did you think you'd be doing a cross-country fix and flip, all the way from San Francisco to Sarasota, Florida, literally across the country?
No,
That's,
no, no, I did not. And
yeah.
to be fair, when I was buying my first duplex, I didn't even know what my exit strategy was. So because I was so excited to buy it that I did not even go into the exit strategies. At that time, I was like, okay, cool, I'm buying it. And yeah, I mean, exit strategy thinking came a little bit later.
Yeah. It's more as you get experience, right? As you've kind of gone through and sold a
Yeah,
property, you've gone full cycle. Now you're starting to think, like, oh, okay, there's two sides to the coin, right? Instead of just the entry, there's also like, what am I going to do at the end, right? So,
exactly,
and it's about
exactly.
marrying the two, but importantly, you took action, right? You didn't let that stop you. You didn't let that stop you thinking, what am I going to do at the exit in, X months or X years? You got into the deal, right? And it made
That's
sense.
correct.
So
That's
that's
correct.
important, right? Because you also don't want to get into a phase of analysis paralysis, right? Where you're thinking, hey, what if, right?
Exactly,
You just got in.
exactly,
So awesome,
exactly.
man. Awesome. You're gonna do a fix and flip. I know you're gonna kill it because you have experience, right? Now you have seen the behind the scenes. Now you have a project you've gone full cycle on. You've been a private money lender. So you've seen different aspects of real estate, right? And there's ways to make money in all three different aspects and other aspects, right?
Mhm.
So now you'll now be the expert of all pretty soon here.
Well,
So
I wouldn't say the expert of all. I think there is always room to grow, even if you're 15 or 20 years in the business, right?
yeah,
Uh,
100%.
yeah. So I, I want to stay humble.
Love it. Love it. Yeah. And that's only possible through networking, right? So
Yeah.
you've gotten these opportunities, learned these things because you've networked, you talked to people, right? Like you asked other people what they're doing. There's no perfect. There's no only do this strategy, right? Because it depends. Different people are doing different things, right? And it's always an opportunity to learn something. So one of the things I know personally that you're very much interested in, and me and you have had conversations about, is multifamily, right? Like I know that's another thing that you want to do and get into that space, right? So tell us a little bit about what your goals are there. Like what do you want to do in the next few years in that? What's your outlook?
Cool. Good question. This is what I've been thinking about lately a lot, because I see that you know there are some deals out there, which is great. So I think the first step for me to be in multifamily space is probably a few things. Keep connecting with people, keep networking. Maybe the deal will pop up, right? Uh, Again, keep connecting, keep networking, and maybe there should be a capital raise. Uh, maybe there should be a need for a capital raise. And one of the things that I'm focusing on right now is the capital raising side of the multifamily. Why? because, well, first of all, I live in California. In California, not a lot of people invest. Not a lot of people invest in multifamilies in California. Uh, well, the people that I know, they don't. And actually, I know some people who actually does. Uh, and but because I was looking at California, I did not find any cash flowing deals at the moment. And because there are some very strict rules about landlording, right? So I don't want that extra headache on my shoulders. I think there are a lot more things to sort of think about besides just tenants giving you a hard time and not paying you. So I decided to concentrate on a capital raising side. And what I'm doing right now, I opened, and so I was thinking, like, how would I do it, right? Like, how would I actually go and tell people that this is what I do, and I think you need to invest. So there should be, actually, I should be connecting with those people, and I am connecting with those people. But it takes time. It takes time because you need to build trust, right? You need to build trust with those people, so they would actually go and invest with you. So one of the vehicles to build trust with people is through podcasting. So what I decided to do is to open my own podcast. But I'm also going to be providing value to people through that podcast. And that podcast is basically about how to build life on your own terms. And it will be called The Shift. Why The Shift is, well, because I am, where I am right now is, I still work for W2. My goal is to not work for W2, not work for a company, work for myself. And I'm going through this particular shift right now in life where I'm sort of, I feel like I'm transitioning from one place to another, and I'm going through this shift myself. So what the value that I'm trying to bring to people is, and I feel like there are like a lot more people like this, right? They're trying to do something. They're trying to get away from W2. They're shifting to become a business owner or entrepreneur, or maybe they were in some sort of business, right? Maybe they had a construction business. Maybe they did something else, but they're trying to shift, to real estate. So there is a shift. There is a shift that is happening in their life. There is a shift that's happening in their mind, right? So, and what I'm trying to do, I'm trying to provide value to, these people by inspiring them to take this, step to transition, right? To take that one step that they need to take to get to where they want to be. And that podcast will be, about that. So I have people on that podcast who either recently transitioned from W2 to become business owner, or they shifted from some sort of business to become a real estate investor, or maybe they shifted from W2 to become a real estate investor. So they already shifted, right? So they already made the transition. So there is a value in it, and to tell that story about like how they did it, right? To inspire others. And yeah, man. So that's what it's going to be about. I already had a few guests on it, and I'm gonna keep going until I get maybe 10 or 12, and then we're gonna start editing and pushing that out to the
Love
world.
it. Love it, man. That's an amazing, amazing topic. And I think you're gonna do amazing in it, So
I
see, this
appreciate it.
is all coming in now after years of experience, right? After you've gone through it, after you've seen like how things are done, right? And now you want to share and provide value to others, right? And that's such a, it is a shift. You're right. That is a mental shift. That is, a personality shift, whatever you want to call it, right? It is a shift. So I see the
Yes,
shift,
sir.
man, and you're absolutely killing it. A
I
few
appreciate it.
things I want to talk there about is that you mentioned like when you started thinking about how can I do this, right? How can I get to that point? Yeah, I mean, have you ever done capital raising or created a fund, anything like that before?
No, I
No.
haven't even done any podcast at all.
Right,
Like, I mean,
right.
if you ask me, like, do you know what I'm doing? I'm gonna tell you, I do not.
No, but you're gonna say I'm
But
gonna figure it out, right? And
I'm,
that's
but yeah, I mean, I'm doing it. I'm taking action, right? So and I think it just all comes from experience. So you just have to do it until you get more comfortable,
yes,
right?
100%. And there's a line, in Rich Dad Poor Dad that I always, go back to, and it's people, they don't say I can't do it. It's how can I do it, right? Like how
Yeah,
can I afford it? How can I make this happen, right? So,
that's right.
it's
That's
it's
right.
huge, and it's a mindset shift, and that's when you start really taking action and doing things, because now it's a possibility, right? It's not just a big far out dream. Now you can believe that you can do it, right? So
Yes, sir.
amazing, brother. Amazing. I'm gonna tune into that podcast. I'm gonna be listening in, man, because I know you're gonna actually provide some awesome value. So
Appreciate it.
yeah, dude. So okay, so you're gonna be looking to transition over from your W-2 to doing real estate full time. Is that right?
That's the goal.
Okay.
That's the goal. Uh, create enough passive income on the real estate side to quit W2 and continue the real estate journey as a full-time real estate investor. And yeah, I think that's the main goal. But I'm sure there's going to be a lot more sort of other goals along the way. Like, maybe I'm also thinking about buying a business, more like a semi-passive business where I could be involved maybe like, once a week, looking at metrics, looking at numbers, looking to see how to improve the funnel of the business and providing some guidance to people who would be working at the business, but not being involved, completely and fully uh, on that, on that business. So it's more like I want to work on the business, but not in that business, if you know what I mean.
Right. Right.
So
Definitely.
yeah, and
Yeah.
so I'm going to be looking for opportunities like that as well, where I can actually, also help people through that business, through some sort of specific business, but that would be more like a semi-passive income business.
Mhm.
So looking at opportunities like that, everything that is around the word passive, I'm all ears.
It's funny. I actually created a post this morning about, I was doing some research on trends in words, right, or phrases, and I was looking up common phrases like real estate or financial freedom or et cetera, et cetera. And there's one that just stuck out, and that was passive income. I looked at the trend from 2004 until today, and it's been a huge, huge growth in that phrase, right? And this is
Mm,
Google Trends, so this is what people are searching for and looking up in their free time. So
nice.
yeah, you are there's a lot more like you, man. There's so many people out there, and maybe a few that are watching now or in the future, right? Like that can resonate to what you're saying. They want to quit their W-2. They have bigger dreams. They want to buy businesses, start businesses, own real estate, have cash flow, have more time freedom, all these things, right? And you're the model, right? Like you've done it, you're doing it, and we got to connect with people like us, like-minded people who are doing it, right? Because not everybody understands it, right? So explaining it to some people, it might seem like you're talking to a brick wall, right? So, but talking to you might be like, oh, how can we do this, right? Like, let's see how we can do this. It just opens up so many opportunities and ways to grow. So, um,
Absolutely.
love it, man. And so, let me ask you, what's so right now, right? Your business, you're growing. What's one thing that you're looking for in your business right now, right? If somebody wants to reach out to you, how can they add value to you?
That's a great question. I think it's just I think right now, like adding value to me probably would be, let's have a conversation. I mean, let's just probably have like first step is to have a simple conversation, because I do want to know what the goals of that person would be. I do want to know who that person is, right? I do want to know his history, and if there is a synergy between us, then there are going to be some opportunities. And but of course, at this stage where I am, like, I'd love to connect and network. I'd love to connect and see what the dreams of other people's are, because I can help those people to achieve their dreams, for example, through investing in real estate, right? So in this particular stage, I think the value would be probably me bringing the value to those people and helping them to achieve passive income through real estate investing, right? If I were to own a business right now and I would be hiring for different type of roles, I think, yeah. So this is like, hey, if you have this type of, if you have this particular skill, I would love to hire you. But actually, one thing comes to mind. So because I started working on a podcast, so if there are people who know how to market it, if there are people know how to edit it and make it great, I would love to hear from those people too.
Awesome. Content marketers, content developers, content editors, people who are marketing and maybe are active in that space, right? Who can help you grow, right? So this is
Exactly.
this is amazing. And so, yeah, okay. So for those people to find you, right? Like, how can they connect with you? What's the best way? Do you prefer them hitting you up on Facebook, to Instagram DM? What is your preferred method?
Yeah, for sure. So they can email me. I'm gonna give you an email address. I mean, you can probably drop it in show notes.
Yeah, I'll put in the notes.
Yeah, it's gonna be probably Eugene at the y2capital.com. y2capital.com. They can find me on Facebook. They can search for Eugene Nilus, or hey, go talk to Samir. He can give you a link to my profile.
I'll give you Eugene's number. Don't worry.
Yeah, give him my number. Give him my number. Give him my social security.
Yes.
Credit card number.
Address. Yeah. This
Yeah,
is where you can go fly and meet Eugene.
Yes, sir. Yeah. So Facebook, Instagram is good. Email is good. LinkedIn is good. Also search for Eugene Nilus. I'm the only one on LinkedIn by Eugene Nilus. It's actually a good idea. I'm gonna go and search it right now. But
connect with all the other Eugene Niluses that you find.
Yeah. So social media is good. Email is good. Feel free to reach out anytime.
Awesome, man. Awesome. If anybody comes my way, I will redirect them to your home address.
Sounds good.
Awesome. Well, thank you, Eugene. It's been an absolute pleasure having you on. You provided so much value to the audience here today. So hopefully, we can help you out as well. So thank you, Eugene.
I appreciate it. And yeah, if I can do anything for you guys, please feel free to let me know. There's no holding back.
No holding back. Love it. Thanks, man.
Yeah, thanks.
Peace.
Bye.